Hey, good morning. Happy Thursday to everybody. It's time for Trader Talks. Kevin is out today. My name is Brent Moores. I'm sitting in for him. Kevin's actually traveling today to Chicago, I think, for a workshop. So I'm glad to be with you, though. I see some familiar names in the chat. Always good to see you. And if you're watching on recording, we're glad to have you too. Also in the chat is Connie Hill. I've been working with Connie for over 2 decades now, and she's wonderful. She's full of knowledge, and between Connie and myself, we'll do our best to get your questions answered there. And you know what? Connie's an awesome person as well. She's I consider her a good friend. Let's go through the disclosures real quick, and then we'll get to what you've been waiting for. The information today is for general informational purposes only. It's not a recommendation. And so we'll look at individual stocks here, individual symbols. Those are not recommendations in any sense of the word there. Paper money software application, which we will be using, is for educational purposes only. We'll be using the Thinkorswim desktop software primarily here. And so it's a great platform. Great platform to learn on, and we'll be going through examples on that. And all investing involves risks, including the potential loss of principal. Past performance does not guarantee future results. Okay, well, so let's head on over and just take a look at the markets here to start. So this is the SPX. The bell just rang about a minute ago, and you can see we're off to a slightly lower start. The trend is the trend. I don't need to belabor what the trend is. You guys all know that the trend has been going up. Just for reference point with everybody here, I have a 20-day moving average and a 50-day moving average. It probably doesn't matter much what moving average you're using right now. It's probably sloping upward given the trend that we've had here on the SPX. And the NASDAQ isn't going to look that much different. In fact, let me just shift real quick to the NASDAQ chart. Here's the NASDAQ chart, and you can see, hey, here's the NASDAQ chart, looking pretty much the same thing, like the same thing here. We do see a little bit of a difference when we get to the Russell 2000. Now, before we get to that, though, again, we're down on the NASDAQ. Why are we opening lower today? Well, probably the big headline news this morning is the PPI report came out. That's the Producer Price Index. Now, a couple days ago, we had the CPI report, which was mostly, we'll say, favorable. And the economy, the markets reacted fairly favorably to that. The implication, or we'll say the way the markets seem to infer the CPI report, is that we're going to keep this, the likelihood of a rate cut is going to continue in September because it was a fairly positive report. With the PPI, the Producer Price Index, it was not that positive. So I want to take a look in just one sec what the impact on the Fed rate cut possibilities are after the PPI report. Both core PPI and headlines PPI were expected to be 0.2%. They both came in at 0.9%. That's a pretty significant miss there. And so what that is showing is, I haven't had time to look at the breakdown on it, but that's, there's some concerns about inflation coming in there. Has that affected our probabilities here, though, is the question for the September rate cut, which certainly can affect the market. Well, let's take a quick look here. Let me just get that up right here. Here's the Fed Watch, tool. This is the CME Fed Watch tool. If you want it, you can always Google it. This is a third-party site. This is from the CME, and Um, and notice still it's showing. This is not, now this is no guarantee, of course. This is no guarantee what's going to happen. Current target rate is, that's the current rate, 4.25. Notice they're still saying there's about a 94% chance of that quarter point rate cut come September. And so the market, I think that's one reason the market isn't thinking that the Fed rate cut possibilities are going to change that much just from this number. Now, what did change, and it's not a huge change, but if you look at just yesterday, the change we had basically was there was a chance, according to this, and of course, this is certainly no guarantee, of basically a 50-point cut on September. Right now, it's shifted to basically a 25% cut here in September. All right, so that's so a little bit of change in that CME Fed Watch for the September numbers. Let's just take a quick look at the December numbers. So this is basically by the end of the year, what are we looking at? And remember, we're up here right now. Looks like kind of almost evenly split between three rate cuts and 2 rate cuts by the end of the year. So anyway, that is kind of the headline news this morning, at least here on those on what's happening on the market. In terms of intraday on the NASDAQ, let's just take a quick look here. Here's our one-day chart. You can see what we do. We opened way up. We're rallying pretty strongly right now, though, off that opening price. If we do this, if we look at the pivot points on this chart right now, let me do this again. Here's our pivot point from based on yesterday's data. We started off right about that S1 level, and we've been rallying on the minute chart up to that. So we'll see if that if we hit that or not. I don't know if we're going to get there, but right now, yeah, not a strong open, but a fairly strong few minutes since the open here. Let's take a look at that Russell 2000. Here's the Russell 2000. Again, trending up. This one, couple huge days earlier this week, selling off more than the Russell 2000 is down over 1% right now. The SPX, remember, is down about 0.2%. The NASDAQ, about the same. This is down over this is down over 1%. Why? This tends to be more sensitive, an interest rate sensitive asset. Remember, small caps tend to have more debt, okay? And corporate debt, how do you finance corporate debt? You finance it with bonds. And if the bonds become more expensive, that is higher interest rates, if we're not going to get as sharp a cuts going forward, that doesn't help small caps. Also, they're also a little bit more, let's see, small, there tends to be more like a financial sector representation in small caps. And that's not the narrative is not helping them either on that. And then finally, of course, small cap companies generally don't have the cash flow and earnings of large caps. And so any economic concern tends to hit them a little bit harder. They just tend to be a more volatile type asset there. Now, in terms of breaking down the market and looking at interest rates, here's the 10-year rate. So keep in mind the 10-year is different than the Fed funds rate, which is what we're talking about here in terms of the Fed cutting. This isn't directly correlated to the Fed cuts. Remember, the Fed only controls that short-term rate. The long-term rate is controlled by other forces and basically market demand of treasuries. This is a 10-year treasury. And you can see this morning, we're peaking up a little bit here to about 4.26% here on the 10-year. And what does that mean? That means interest rates are going up a little bit today. It's not, it's not changing the trend. The general trend on this has still been going down. And, you can do this. Now, RTR said you could look at 10Y futures as well. You can. It's going to give you essentially the same thing, except we're just going to move the decimal point over 1. When we look at 43 on that TNX, it's basically 4.3, or 44 is basically 4.4. So that's how you read that in terms of the actual interest rates there. So that's the story right now, and this is the kind of thing that could be affecting those small caps. Why small caps are spooked a little bit, maybe more than those large caps. Now, I want to just talk about performance here. I want to just look at a year-to-date percentage chart. So this is a year-to-date percentage chart, and I don't want the TNX. Let me go back to the SPX here. So far this year, the large caps are up just shy of 10%. Just tight. That's a pretty strong year so far. I mean, we're not quite 2/3 of the way done with the year, but that's a pretty decent year's performance. What about the Nasdaq? The Nasdaq is up about 13.5% this year. But keep in mind, these are just the broad indexes. You can break these indexes down. Let me go back to this SPX, and let's break down the S&P 500 on terms of growth stocks and value stocks. And this is something I've said before. Some of you may remember this. If you take down if you take the 500 stocks in the S&P 500 and break them down either into growth or value, it's not a perfect split. In fact, some of those stocks, depending on the list of growth and the list of value, will actually fall into both categories. Okay, kind of weird, but that's how it is. Now, there are different lists, and one list I'm going to show you is called the pure growth list and a pure value list. And the pure growth list or pure value list is just taking the most growth stocks in the S&P 500 or the most value stocks in the S&P 500. So there's no kind of overlap on those. And if we look at the performance on those, remember the S&P 500 just under 10%. The growth aspects of that, the most growth stocks of that, are up about 12%. Okay? The most value-ish stocks of that are up about 4.5%. So kind of a difference there in terms of the returns we're getting on growth versus value this year. Now, that's this year. Of course, the market changes, okay? The market changes over time, and sometimes value outperforms growth, and sometimes growth outperforms value. This year, it's been a growth stock theme, though, here, and they've been outperforming, right? All right, let's take a look at a few other things here, because I want to go. Now, someone, who was it, mentioned in the chat, Carol mentioned the VIX. Let's look at the VIX here and see what the VIX is doing today. I would expect it spiked a little bit. Yeah, it's spiked a little bit here today. This yesterday on the VIX, and in fact, let me get to a normal chart here. I'll pull up the normal chart. Yesterday on the VIX, this is the lowest reading we've had on the VIX since last December. Okay, yesterday. Spiked up a little bit today, but still a relatively low reading on the VIX. So this can tell people kind of a level of concern people have on the market. And if you can kind of think back to March, early April, and if you think back what your level of concern was, I feel like most people were pretty concerned about the market. A lot of market jitters there. That's why they call the VIX the fear gauge. Well, right now, PPI reports, doesn't matter. Right now, the levels of support, the levels of fear in the market gone up a little bit today, but overall, people are fairly confident in the market, because I think one reason is when you look at that S&P 500, it's just kind of, no matter what it's been hit with, it's been trending up. So no changes there on that. Now let's look at some commodities just to get a sense for the kind of what the broader market is doing here. And then we'll look at some individual stocks and perhaps some sectors as well there on that. Okay, so let me just get out of my drawing tool and let's look at oil here first of all. So let's do this. So we're not talking about trading it. We're just talking about the commodity itself. By the way, if you are interested in trading some of these, futures, we do have a futures webcast that occurs on Tuesdays at 9:30 Eastern time. So you may want to check that out. But just in terms of oil, this is just crude oil. There's different symbols, by the way, this is light sweet crude, West Texas Intermediate light sweet crude. If you wanted to see Brent crude, you could go BZ/BZ to take a look at that. And the chart is probably going to look not that dissimilar to the West Texas Intermediate crude, which is what we're looking at here, this is typically used in the US, the more common symbol to look at in the US. In Europe, looking at Brent crude may be the more common one to look at here. But oil prices are up a little bit this morning. And this represented kind of a 2-month low here we hit yesterday on this. So, sometimes when we talk about, markets going up or markets going down, we look at different reasons for it. And the reasons, maybe they're right, maybe they're wrong. One reason why some people are attributing the lower price yesterday, at least in crude, was some optimism about the Putin-Trump summit in Alaska. Okay, so the theory is this. The theory is if they can kind of come to some sort of agreement, and I'm not going to talk about right or wrong here or whatever, but if they were to come to some sort of understanding and Russian oil was to kind of reflow through the market, that could help on the supply side of things. And that could be one reason why things have pushed down. I don't know whether that's the reason why oil prices have gone down or not. Point is, they're low, up a little bit today, but in general, we're lower than we've been since early June. Okay? So, questions. There was a question in the chat I saw on the tickers on the value and the growth components. The ones that I used, again, there's different indices, but the pure value and the pure growth indices, and you can put these symbols in if you want. SP 500. Sorry, my drawing tool is a little laggy here. PG, or exact same thing, end it with a V, and you got the value. You got the value index there. Okay, so in any case, that is oil. Of course, there's other things to look at in the market. Let's look at gold and see how gold is hanging out there, how gold is doing. Here's gold. Gold's been, in general, has gone up. This is a 6-month chart for the year. Maybe kind of flattened out a little bit here, but still strong. Still strong. And, one reason for that is the dollar. Okay. Dollar has weakened. There's a general inverse correlation. And you got to be a little careful when you talk about correlations, because sometimes people will say, well, when X goes up, Y goes up too, or X goes up, Y goes down. But when you look at them and put them under scrutiny, that doesn't always happen on a lot of these things. And this is one of those things. In general, when the dollar weakens, precious metals strengthen, and vice versa. Okay, but there's not a perfect inverse correlation to those. So just be aware of that. But here's the dollar, this is the dollar weakening, and gold has been relatively strong here. These are all alternative assets. What are their alternative assets to people? Well, an alternative asset that we weren't talking about 10 years ago was like Bitcoin. Okay, so we can kind of see a glimpse of crypto here. What's Bitcoin doing? We peaked out 125,000 yesterday. So that was an all-time high that was actually this morning, I guess, there. Overnight, perhaps, 125,000. Well, we've dipped down to basically 19,000 right now, but this has been quite strong. And, this has been a very volatile type asset class, crypto, when I'm talking crypto in general. And that's been a concern about that. But when we have this risk-on appetite, this has been performing quite well. And that's what we're seeing right now, about 119,000. It's not the only, future that we can use. Again, we're not talking about trading the future right here. We're talking about just kind of looking at the markets. But other products, here's Ethereum futures, have had a similar really strong run, except even stronger. But, when you see something with this kind of volatility, where it's gone up, I mean, we were down at just under 1,400 in April. We're now at 4,800. So that's what, tripled basically, or more in price over that time period. When you see assets go up that fast, I don't care what asset it is. When you see something go up that fast, just realize they can turn down and go down probably just as fast or faster, so these just tend to be a little bit more volatile. Let's look international here in the international markets. Here is, this is kind of a developed markets index, and you can see some strength here. In fact, let's go back to that year-to-date chart we were looking at earlier. Here's year-to-date. This is up 20%. Remember the SPX, the US large cap markets, were up about 10% year to date. Okay. This was about 10% up. This is about twice as much. Okay. What about emerging markets? Emerging market, about 18%. So hanging in there. So really, the US has underperformed this year. Okay. The US has underperformed this year. All right, let's address some stuff in the chat here. Number one, just an observation from Scott. The NASDAQ has turned, is in the positive here. So yeah, it is interesting. We looked at that opening price on the NASDAQ. And then we looked at that opening price and we looked at it opened lower, but zoom in here. What am I doing? Oh, let me go to my one-day chart. Okay. Here's my one-day chart. Here's our gap down. Okay. Here's our pivot point. We've climbed our way up. We're right up to that pivot point there. Okay. So interesting, strong rally in that. All right, let's go and let's go back to where we were. Other questions. How do you get a percentage start? Okay. All right. So yeah, it's going to move up and down here, but fair enough. How do you turn a chart into a percentage chart? How do you turn a chart into a percentage chart? The easiest way to turn it into a percentage chart, I think, is to go to the little squiggly line right here, click on the little squiggly line, and go to show prices percentage right there. Okay. Click on that. Now, whatever time frame you were on, I was on a 6-month time frame, it turns this scale to a percentage chart. Okay, fair enough. You can do that now. You can change the time frame. If I change this to a year, it's going to give me the percentage over the past year of how the chart is done. Okay. Now, kind of maybe a follow-up question. How do I get a drop-down menu? I have this actually right here as a percentage chart. And how do you create these drop down menus? You'll notice often I use these. I'll change time frames, or I want to throw on a different set of moving averages here on this. Or I just want to remove everything. So I saved a chart as a plain chart. How do you do that? Well, it's kind of a two-step process. You can put these quick links to change your chart, add to create different time frames, different studies or styles, charts on there if you want. First thing you got to do is go to the gear, click on that gear, and go to under the General tab where it says My Tools. You got to put it on each chart if you do it that way. Now you can also go single panel. It does the same thing, but it's off the chart. But I'm going to stick with what I have on each chart here. Okay, you got to do that first, and then you're going to get a menu up here with a little gear, and you click on the little gear, and then it says, "Hey, you can." I have a lot on here. Let me see if I can shrink this down. I can. Come on. Is it going to let me adjust the size of it? Well, I don't know how to get that off the top of the chart. If you go to the very bottom of it, I have so much on there. My screen is zoomed in so you can see better. It has a button on it that says Add Button. And you can add a button there. And I just added a 2050 simple moving average button. I saved it as a style. That's a style I saved. Okay. I saved a plain chart as a style. I changed different studies, added it. This is a study if I want to look at implied volatility and so on. So go ahead, play around with that, and you may find that helpful. Now, I want to keep on moving because we're going to run out of time here before we get too far into this. I want to look at some stocks in the news here. Some upgrades and downgrades. I think we looked at the major markets that I wanted to look at here. Upgrades. Bank of America has upgraded Dow. Okay. Bank of America has upgraded Dow. Well, Dow's had a terrible performance for a long period of time, and the upgrade doesn't seem to be affecting Dow right now. Dow is down right now, but they upgraded to neutral from underperform with an unchanged price target of $25. So if you're a technical trader on this, a single upgrade may not change your opinion of it because right now, this is the general trend. It's not a perfect line there, but that's the general trend we're seeing on Dow right now. Okay, this is not, so good question. Is this the Dow Jones Industrial Average? No, this is Dow Chemical, the company Dow. Okay, so that's what this is. Which, obviously it's a big company and it's a big company that's been underperforming. So let's look at, I'm just looking at kind of bigger names here. I think that's the biggest down. Well, maybe let's do one more downgrade. Sherwin-Williams, SHW, Bank of America has downgraded Sherwin-Williams. No, they didn't. They upgraded Sherwin-Williams. Okay. Hold on. Sorry, I misread that. Okay. I misread the prior one. That was an upgrade on Dow. Oh, that's what I said. It was an upgrade. Yeah. So, and another upgrade is Sherwin-Williams. Okay. Another upgrade. This one has been taken off here. This isn't post. It's interesting. You see these big moves after earnings typically. No, this is taken off over after earnings. Bank of America upgraded Sherwin-Williams to neutral from underperform with a price target of $375. So we're almost there on that price target. Okay, that's kind of why probably they're calling it a neutral from an underperform instead of a buy, because if your price target is 375, it probably doesn't make sense to have a buy price target if we're already basically there. So there we go. Okay, so those are kind of a couple big name upgrades. Let's see. All right, let's look at sectors here and maybe let's look at some individual stocks. Tesla is a big stock. May have heard of it. Kind of just going sideways. Not much of a trend on Tesla. Tesla is hiring vehicle operators in New York City to gather audio and video data for their autopilot program. This was reported by the Wall Street Journal. Okay, so that's not really affecting them, but that's they're obviously in the news a lot. NVIDIA, let's look at some chips. NVDA. We'll look at Intel in a sec. Someone was looking at asking about Intel. NVIDIA's just been climbing up, man. It's not much to say on NVIDIA. Mizuno raised the firm's price target to $205 from $192 and keeps an outperform rating. Well, this has been like really strong driving the SOX index. Here's the semiconductor index, which has been pretty strong. But we've also saw AMD lately had a struggle on earnings, but it's just resumed. I mean, we had this big gap down on earnings. We're above pre-earnings levels right now on that. So real strong. Not all chip stocks are doing well. Micron's done fairly well, a little bit more struggles. A chip stock that has not done well is Intel, at least until about a week ago. It's been doing a little bit better then. All right. So that's it. There's some chip stocks for you. Let's look at Alphabet. Here's Alphabet. Trend is going up. No change in that. Let's go. Here's a 20-day moving average. Look, this is pretty strong. Even if you put up a 10-day EMA, okay, and this is a fairly strong, not fairly, this is a short-term moving average, okay? It's not just a 10-day moving average, this red line. I switched to an exponential. So, and if we've been above this for the most part, for a couple months now almost, that's a pretty strong trend on Google Alphabet. They're investing an additional $9 billion in Oklahoma within the next 2 years in cloud and AI infrastructure. So the company said in a blog post. So that's what these bigger companies are doing, is they're investing in investing in infrastructure and AI and etc. Apple, same thing. Apple, which has maybe been kind of behind the curve a little bit in terms of some of these big tech companies and AI. Apple is plotting, they're trying to make their comeback in terms of the AI sphere here with different devices, including robots, okay, a lifelike version of Siri. All right. This is from Bloomberg. Okay, Bloomberg's reporting that. So they've taken off pretty significantly here lately. And another stock in the news, and this one really affected the space, was Amazon. They're going to be expanding their grocery service, grocery delivery service, I should say. On there, they announced that Amazon's up 2.25% today. You can see we've had a nice run up. But I was looking yesterday at like Kroger. Look at what happened here. This gap down on Kroger, for example, is there's concern in the space of, well, how much is Amazon's perishable grocery delivery increase going to affect their business there? So, yeah, Myron said in the chat, Apple had that meeting in the White House. Yeah, they'd had that where, remember when let me go back to Apple for one quick sec here. Okay, when we were talking about Apple, this kind of big jump here was Tim Cook was in the White House, and and the president announced the high 100%, I think, tariffs on semiconductor imports, but the exception being if you're moving production to the U.S., then you'll get then you won't be subject to those. Well, Apple was in the White House announcing their investments in the U.S., seemingly exempting them from a lot of the tariffs, and that's what really spurred that Apple trade there. Okay, now the earnings calendar isn't huge this week. Let me go to what do I got here? Let's go to calendar. Let's go to earnings. And today is the 14th. This is S&P 500. I got a lot of companies here. We don't have a ton. Deere, and we had Cisco yesterday. Okay, those were the two kind of biggies. Next week, we've got Home Depot. Oh, AMAT as well. AMAT after hours today. So let's just take a look at some of those. Here's Cisco. Hit down, opened down significantly, but it's recovered pretty significantly. That's a pretty good candle there. Pretty good recovery on that. Deere, not faring well after earnings. I mean, we had a pretty good channel here. And, there's a thing when you have a support level, say, okay, we'll call that kind of a support level or a channel here. And you go, when is it going to break out? Well, it can break out anytime, of course. But if there's any time a stock is more likely to break out of a support or resistance level, it is on earnings. Okay. And then AMAT, this is before earnings. We haven't seen this yet, but we could very likely we'll see a significant move on AMAT after earnings. Of course, you just never know on that. All right, I want to look at sectors here real quick before we run out of time. And what I have is a chart, which is the 11 sectors. And I have two columns. I have today's column, and we can sort by today's column and see what's going up or down. Not a huge change on most of these. Materials, real estate, energy, not doing so hot today. Okay, but it's a different picture if you look over the past month. This is a month change column I have on here. Last month, IT and communications both up about 6% or so. Those have been the winners over the past month, IT and communication services. Okay, so that's what those charts look like. Utilities, doing fairly well. They probably a mostly improving. I say mostly because we talked about some challenges today on the interest rate front, but a mostly improving interest rate or lowered prospective lower interest rate environment would tend to help utilities. Again, they have a fair amount of debt, and also they're a product that people buy for a dividend often. And if you can get a lot of money from, say, a treasury, a decent income from a treasury, in other words, high interest rates, that is more competition for utilities. So utilities tend to do better when interest rates fall. So that may be one explanation why here's the utility sector has been just kind of going up lately. But, and on the other end of the spectrum, energy has been getting hit pretty hard. Real estate, not so great. Healthcare, not so great. Now, if you want, you can use this as a starting point for trades. Now, this is just one approach to trading, so this is not a recommendation. But there's something what we call top-down analysis. I know a lot of you have heard of top-down analysis. Top-down analysis is where you look at the broader market, you're going to look at the whole market, or you could look at, say, sectors. And you can say, look, communications has been strong, and therefore I want to continue to look at individual stocks within this sphere. The theory is this: if you have a stream, okay, and your stocks are swimming in the stream, okay, the stream is the sector they live in. You're either swimming upstream or downstream, and it's a lot easier to swim downstream. If the flow of the stream is going up, so to speak, in other words, doing well, it's a lot easier for individual stocks within that sector to do well than to be the few stocks that are going against what the overall sector is doing. Okay, so that's kind of the theory of top-down analysis. So what you could do from this is you could say, hey, look, utilities has been pretty strong. The trend, this is what we're looking at, this is a utilities chart right here. The trend has been pretty strong. We're basically been skimming across that 20-day moving average. Plus, from a macro level, maybe I think that perhaps interest rate environment may get better. If you're of that opinion, what you could do is you could go here and you can just pull up utilities. And now some traders will use ETFs. We're not going to talk about ETFs today. If you're interested in ETFs, Connie teaches a trading ETFs webcast on Mondays, 4 o'clock Eastern time. But you can also pull up your list however else you have it. And this is just a list I have of S&P 500 utilities. And then what I can do is I can say, look, I know utilities is something we want to target, but I'm going to look at some individual companies in utilities that maybe look stronger. Hey, look at PG&E. This has been very strong lately. We're trending up. We're above our 20-day moving average. Maybe this is a trade that you're going to do that. So we could do we're about out of time, but we could do a sample trade here. We could say, I'm going to go to this recent low. I'm going to say my support level is going to be below there. I'm going to say we're going to cut out at about 1450 as a stop. Okay, stops aren't guaranteed, of course, but I can put in a trade here. I'm just going to right click on this and I'm going to go buy custom with stop. And let me get here and we can get rid of this so we can look. And I'm just going to do 100 shares. Okay. You change your units according to the risk that you need on this. And we said our stop is going to be 1450. Okay. And maybe you don't want it a round number. Some people don't like the round numbers there. So I'll go 1447. Okay. All right. Stop. Good till canceled. Confirm and send. Send. And we just did a sample trade. That is a top-down analysis trade there, folks. We looked at the overall sector, the general market. We started with general market has been strong. Today, not the strongest. We looked at the individual sector. We found a stronger individual sector. And we actually even had kind of a macro reason, a macro thesis. Interest rates are going down. It may help the utilities sector. And then we found a stronger stock in that sector using technical analysis. All right, folks, that's it. That's what we got today. Thanks for joining me today. Thanks, Connie, for helping me out in the chat. And there you go. I hope you all have a wonderful day. Hopefully your trading goes well. And we have coming up at 11 o'clock Eastern time, we've got long verticals. Make sure you check that webcast out. And thanks for joining me today. We'll see you same time next week, or same time. Kevin will be back. I'm not sure when Kevin's back. I think on Tuesday Kevin's back, but we have great subs in the meantime. So Have a great day, everybody. Bye-bye.